Hey everybody, Kimosabi here. And is it done? Is it done? Don't know. But we have some potential buy setups happening here. Uh, Daily candle, our daily wick, 50%. Then it came back up, came back down, tested that. We didn't quite make the 50% of this wick. Now, that could be showing strength, the fact that it didn't come all the way down there. But we might revisit down there and just take out that wick again, just to be funny. Maybe it does it on NFP, non-farms payroll news tomorrow, just takes out that wick and then reverses, or maybe it's going to break down. Stop loss for me is at 81, 81.6. Well, actually, a little bit above there, 81.9 for now. You can see how these wicks are technically building liquidity down here, so this could be just fake out to the upside and take out those wicks potentially. But that kind of shows signs of accumulation here at the lows. So I'm not opposed to that. And let's draw out a potential pattern that I'm seeing here with those three wicks and what I'm kind of thinking here. So you got 1, 2, 3 wicks that are getting kind of absorbed as price comes into there. And the buyers are stepping in before price breaks down. So that's a good sign. Not necessarily reversal yet because you don't have any higher highs on the daily yet. But I was thinking of these three stabs down, kind of equating to these three stabs down, and maybe that's the pattern. No way to know for sure until we get more data, but I mean, this could be just three waves. That's complete. And that's like a market maker special where you have price break the high, break the low, break the high, then break the low to grab maximum liquidity as a potential distribution or to reaccumulate more. I do find that the market is having a hard time to find the liquidity it needs. So the market seems to be pushing further than it maybe should. It's front running targets and extending past targets that I would have expected, especially for this drop down, getting down to 79. I didn't like that as much as like an 87. If you wanted to show strength, you would have kind of bounced off the 87 range and got right back up in there. But it didn't do that. I don't know if that's more of a shakeout type of thing, but it definitely came deep, um, which is why I don't think this is a wave 4 anymore. But I'll get into that Elliott wave count in a little bit. But if these three wicks are matching over here, then maybe what we can be expecting is this being three waves up, matching with that three waves up. It's just going a little faster. Then you had that drop down, and then pop back up, down, and then up, down, and then up. So we might be repeating something like that over here. To then just repeat this drop right here, back to previous supports. If price does get up there, around the 98 to 99,000 range, and then come back down and back test, 80, 88,000. Make sure it's support, and then match this leg up to here and start showing some strength up there. Now, if this does happen, seeing as this price is acting faster than that, taking about half the time, this might be up here by Sunday night. Now, that would be evidence of a potential short squeeze coming early next week if price action does that back test on, say, Saturday or something like that, and then pushes up into the 102 range to close out the week. Then you'd be right here, ready to blast off. And that may actually be the only way that you're going to get this market to get bought up is through a short squeeze initiated by the CME traders that are short. So this might be a bear trap for them. They get trapped over the weekend, similar to what happened back in November, where price broke out and it was hovering up here for the weekend. And by Sunday, you were already up here. CME traders had to close their shorts, buying this up, and now they got their gap fill. So if price action is going to mimic that leg somehow, some way, and maybe get up here, you might close a daily higher high, then you could look for the higher low. And that higher low might just be this move coming back down to previous support. Might come deep, deeper than expected, maybe right there, and then pop back up to then do that move. And it seems like it's going a little faster if the market wants to be bullish. You really never know. That can be a topping formation, but you seem to be reaccumulating. And similar to what happened back in August, all the way through November, and this is 3 months of just choppy sideways up. It can take some time to get back up sometimes. And that's kind of what I'm expecting, unless if the weekly candle closes up at like on Sunday at like 102, 103, then they might be initiating a short squeeze, and you kind of got to be on guard for that. The price action that we've had this whole cycle has been, slow reaccumulations into parabolic moves, into chop and parabolic move, and it all goes in 3 waves. At least that's the way it looks to me. And we can measure these out. What I kind of wanted to do anyway is look at that first kind of ABC up. Let's see if we can label it here from the bear market lows. A, B, C. Looks good. We can do a trend-based fib extension from the low to the high of the A wave to the bottom. You can see that it reached the 1-to-1 fib extension perfectly. So that's a very nice ABC. And something else that I find very interesting is the timing of it. It took twice as long, or took half the time. So if I take a trend-based fib time and measure this first A leg up, project from the B leg down, that line right there depicts the 50% Fibonacci time of the A wave. So it took half the time to get up there. Now we'll move on to this next impulse up and kind of do the same thing. We'll label it with A, B, C. Check the measurement from low to the A wave, bottom of the B leg, and it reached just beyond the 1-to-1 fib extension. Now, just for confluence, let's check the time. This is something I was looking at earlier. Measure the A wave, project from the B wave, and the high came in, I have to say probably the 618, but just beyond the halfway point of what the first leg up did. So it went twice as fast, gave you the same distance in percentage, but half the time. So if we do have a low in place right here at 78, we could potentially extrapolate the same data, expecting another ABC, A, B, C, and we'll take a Fibonacci measurement from the low to the high to our current low, which, price can go lower, then we'll have to reevaluate. That gives you a target of 172,000 as a potential, and the timing of it, low to the A, projected from our current low, assuming that holds. The 0.5 time fib lines up with Monday, May 5th of 2025. So maybe this leg does extend into early May and gets up there if it does want to be bullish. There could be some timing expectations for it. And then we'd have 3 ABCs running up. Is that the fifth wave complete and that's all you get, or does it extend further? If it does extend further, I'd expect consolidation for a few months. Into the end of the year, you might have another rise, but that could be somewhere to take some profits off the table. And the timing with the sell in May, walk away, may stand true this cycle. Might also just continue up like 2017. 2017, this pattern is kind of mimicking the same thing. It's taking a little bit longer, kind of drawn out a little bit, but it looks very similar to 2017. That doesn't mean 2017 repeats. They are painting the pattern for what they want us to see. So I just go with the math on it and say that, hey, this is a repeating pattern this cycle. You got 3 drives up. That could be your top, and May could be the timing for it. And a heavy determining factor for me is the weekly chart. So let's go on the weekly chart and see what price has been doing since the bear market lows. You've gotten a higher high, higher low, higher high, higher low, higher high, higher low. This one gave you a slightly higher high. This one gave you a equal low. So there is liquidity down there that may be for future use. And then you had your higher high, higher low, higher high, and there's your lower high, or lower low. So lower low into a lower high. That gave you your consolidation. So what we have going on here on the weekly chart, if we do close a candle lower low, I'd expect a lower high and then consolidation until you close a higher high. Now if price consolidates and then gives you the same type of setup that it gave you last year, then you know to look for the higher high close, buy the higher low, and let it rip. I have a sneaky suspicion that they're going to do the same thing they did last week and close this candle on Sunday above the previous lows at 93 to maintain the uptrend. It really depends on where they want to take price. After closing the candle up there, that's just to tell you, hey, we're not necessarily in a downtrend yet, but we do want to back test it. So we'll see if this candle closes green or not. So if the candle does close red, say that the weekly candle closes down here at like 85, then I would be looking at this as 3 waves like that, and then potentially get a few weeks of up into there, to then just come back and repeat this move back down, and probably break the lows at that point. Get something real deep. And it would just be taking liquidity up here, pushing it down to there, and then maybe you could repeat that leg afterwards in the next daily cycle potentially. Certainly wouldn't be the prettiest cycle, but we work with what we've got. So if this candle does close a higher low somewhere around 94,000 or even up to 98 on Sunday or even higher, we're still bull market, structure not broken, no change in behavior yet. We're waiting to see if there is a change of behavior. So we're looking for a green close here. If price does close much higher, say 102 to even all-time highs, watch out for a short squeeze early next week, like at the Sunday open. Certainly watch sentiment coming soon. We may have some of the most exciting news that we've ever heard coming out in the next month or two. And that could be how they mark tops. It's not necessarily that anybody's very euphoric, but the news may be euphoric, and that may mark a top. And if price gets up to like 170,000, I would think that the market would be pretty euphoric. Getting down to the 1-hour chart here, still lower low, working on a lower high. It might be at the daily open. We need to start closing an uptrend here on a 1-hour. This was in my buy zone, so I snagged a little bit there. Got my stop loss much lower. Well, not much lower. The stop loss was at 81.9. I don't want to see price revisit down here. I think that's too low. If it does, then I'll reevaluate. But looking for any type of low time frame uptrend to start out of here to potentially add. If you get a 4-hour close up higher, that puts you in a 4-hour potential uptrend, or even in a 1-hour uptrend. But you're not even closing above this 1-hour close here, 89,300. So maybe this comes back down, revisits there, pops back up, pops back down, and then breaks out tomorrow, or we're going down to Goblin Town, and it's time to get stopped out on a bunch of positions and then reevaluate over the weekend. And for now, this does look good. This looks like a slight distribution, kind of pushing into the cells. Took all the liquidity down here in a very abrupt move. I think there was a lot of liquidations there. I'm not sure. I didn't really check into it. But it seemed like there was some news that came out with an executive order, and market immediately went down. And that's probably because this spike up was somebody going max long, and they just brought the market down to liquidate whoever that was. And now the market is just finding acceptance down here and accumulating a position. So you may have a range that gets created here, a reaccumulation here, pops the low and then reverses, or it wants to take out these lows over here at 81.5. That would be like an ABC, kind of coming down A, B, C. So see, as this came down in an impulse, this might come down in a three-wave move. It might look like a three-wave move. We'll see. But yeah, keep your stops tight and have a good night.